Now, to our discussion around inflation, which eased to 20.12% in August from 21.88% in July. The National Bureau of Statistics said this in the press release on Monday. The Statistics Office said the August 2025 headline inflation rate decreased by 1.76%. That's compared to the July 2025 headline inflation rate. Inflation indicators compared prices of goods and services over 12 months. A decline does not necessarily imply a reduction in prices. Instead, it shows the rate of price increase has fallen compared to previous months. On a year-on-year basis, the Bureau says the headline inflation rate was 12.03% lower than the rate recorded in August 2024. This, it said, shows that the headline inflation rate year-on-year basis decreased in August 2025 compared to the same month in the preceding year. With this, though with a different base year, of course, of November 2019, the NBS said on a month-on-month basis that the headline inflation rate in August 2025 was 0.74% lower. That's 1.25% lower than the rate recorded in July 2025. That's 1.99%. Well, let's continue our conversation around inflation for the month of August. My guest, a senior economist with STIRS, Mrs. Dumebi Oluwole, is my guest. She joins me from Ikeja via Zoom. Thank you. It's good to have you on the show.
Thank you, Tolu. It's always great to be here.
Thank you so much. It's really good to see you too. Well, let me ask what you were expecting first for August 2025 inflation figures, considering the decline that we started seeing, I think, about 5 months ago. What were you expecting?
To be honest, directionally, we did expect a slowdown in the inflation numbers. Our projection was a more marginal slowdown compared to the, July inflation figures. So we're projecting around 21.76 thereabout. And that's because we did factor in some of the flooding incidents, that happened in the month and how that was going to impact, the inflation numbers. But turns out that, the base effects have really nudged inflation downwards, and the decline in petrol price, or at least the stable petrol prices, have really shown their strength in the headline inflation figures for August.
So basically, the issue of the month-on-month, there was also a reduction with that. How does that also come to you? Looks like it's a step in the right direction. We are getting there gradually. What do you think?
I mean, yeah, of course. I think it's one of those things that, investors, business owners, and even consumers, there's some respite on there. But I think more importantly is the reasons why these numbers, declined the way they did. And this is one of the sharpest month-on-month declines we have seen in a very long time. And I would say that, at least for now, we do know that the harvest season really had an impact on food prices. We've seen commodities like tomatoes, peppers, onions, even rice as well. Commodities that we saw their prices almost remain very sticky downward from the beginning of the year up until June. We saw those prices decline significantly, and that has dropped inflation drastically. We've also seen the Naira stability, support imported inflation. Imported inflation has remained relatively stable, and it's even declining. And so that has further, again, supported the decline, the moderation in the headline inflation rate, both month-on-month and, year-on-year. And I think a very big win as well would be the petrol prices and how that has impacted transportation costs. And by transportation costs, I mean distribution costs for food items. Diesel prices, petrol prices have remained relatively, stable, and to some extent, in some states, also declining. And that is, having a positive impact on inflationary pressure. So I would say that, yes, this is good news. The expectation now is, that this trend continues.
Looking at this trend, I'm looking at the key contributors to inflation for the month of August: food and alcoholic beverage, restaurants and accommodation services, transport and energy costs. If we look at all of this put together, do we have any quick wins moving forward and sustaining this to get to that 15% point, which government is targeting by the end of the year?
I mean, I would say Food will be the very big deal here. Even in the reconstituted inflation basket, food still accounts, for a large percent of the items in Nigeria's inflation basket, and will definitely, have a huge impact on the headline inflation numbers. I would say that we're heading into the festive season. This is the period where, food items typically increase because of high demand. And I will say that if prices increase significantly, we might see like a nudge in inflation, but maybe not by so much, because other factors right now are really pointing towards a decline, starting with, petrol prices and transportation costs. Petrol pricing itself, we're seeing forecasts for a further slowdown in Brent prices. And right now, I think JP Morgan is even projecting Brent prices to get towards $55 per barrel. We're looking at about $60 per barrel. And if that happens, it means that petrol prices should largely see a decline heading towards the end of the year, and that would further support a slowdown in inflation. The other big thing as well is the Naira. Right now, we're looking at Naira stabilizing at between 1,500 to 1,550, 1,550, 1,560. And if that happens, what this means is the Naira stability will further support, what I had mentioned before, that is imported inflation and general business sentiment, right? Because a very significant thing that happens towards the end of the year, dirty December rave, businesses are stocking up, to meet demand that will be coming up, towards the end of the year. And so there will be that high influx of, Forex demand. But we are seeing the CBN, support the market and ensuring that the Naira remains stable. And if this trend continues, we should see that significantly support the inflation trend. So there will be a lot of revised forecasts here and there. But the temperature right now for Nigeria's inflation environment is that it will remain cool up until the end of the year.
In my research, drivers of disinflation, you've talked about base effect, stabilization of the foreign exchange market, improved agricultural production. But I would ask you, as an economist and operating in the market, is our currency appropriately priced? I always like to get the views, divergent views, really about this, because 1,500 Naira, yes, there's been stability, even, looking at the parallel market and, availability of the rate of the cash itself. You can always get access to it at any time. But really, do you think that we could do better?
I mean, of course, there's that world where the Naira significantly appreciates. I know that talks around the Naira getting to 1,300, 1,400 is really the market is looking towards. Some are even, almost talking about Naira getting to 1,200. But I will say context is extremely important as to how we view the Naira's pricing right now. We are coming from a world where there was a lot of backlog of FX demand that was unmet, and the central bank has done the good job of ensuring that that is met. We're also coming from a world where our net FX reserves were significantly low, and that has significantly increased now to about $24 billion, and we're seeing reserves also, significantly increase. The gross reserves now nearing $42 billion. We are seeing the market stabilize, investor and business confidence also stabilize. And remember that we're coming from a world where the Naira was devalued, right? To meet its true, to meet its fair value, at least based off of market demand and supply, right? So if this trend continues where there's a lot of transparency in the market, we are seeing that demand for FX is met. Supply is also buoyant, right? The world where the market corrects itself and the Naira appreciates significantly to what businesses are hoping that eventually gets to, we would likely get there. But I will say that that is not going to happen in the short term. And by short term, I mean 1 to 2 years. And the reason why is because there has to be a lot of market correction for the Naira to significantly appreciate to that amount. We still have debt obligations to make. There are debt service payments, that's interest payments now to be made. While our production is increasing, at least between the latest numbers from the NUPRC for July, the crude oil plus condensates were at 1.7 million barrels per day, and we're hoping to get to 2 million barrels per day. But that coinciding with lower oil prices means that our inflow of FX will still be somewhat threatened, right? And that's something to also look out for in how much, the inflow of FX can, support the naira. Not all exports are doing their thing, but when you actually dig deeper into the numbers, you will see that the naira devaluation is actually what has propped up the increase of non-oil exports in naira terms. And not until we see that significant bump in FX inflows coming from there, the naira stability or naira significant appreciation towards what some market sentiments are leaning towards between 1,000 to 1,004, it would largely be unachieved, at least in the short term. Another thing to really consider is capital inflows. We've been receiving a lot of strong FPI inflows, but again, for that significant appreciation to happen, we need more stable FX, right? And so we're in that world where we are working our way towards the ideal situation for a lot of businesses where the naira consistently appreciates, but that wouldn't happen in the short term. We're on our way there. There are prospects for it to happen, but I do think patience and a deep understanding of the context around what the market is really operating in is extremely important. The goal right now is FX stability, right? That the naira is experiencing sharp swings is good enough for the market, because then it's good enough for business owners to plan, it's good enough for investors to make investment decisions, it's good enough for Nigeria to venture into the capital market or the debt market to raise money. It's good enough for the World Bank and IMF to give thumbs up for the currency. It's good enough for sovereign credit ratings, and it's good enough for the broader economy in general. So I will say stability right now is the push, not so much an appreciation towards what businesses or other stakeholders would ideally want.
Great stuff. I know you're doing a lot around the agricultural space, and almost finally now, before I let you go, enhancing food security is key, and that's part of ways we can, of course, address the issue of inflation, because everyone is interested in getting food, putting food on the table. So what do you make of the challenge of price of foodstuff? Yes, we hear relatively that there's a bit of reduction in some particular foodstuff, but what are you learning with regards to that, and what more do you think Nigerians need to know about that?
I mean, what we are learning, at least being, heavily involved in the agricultural space, what we are seeing is that there is a need for a lot more infrastructure, and infrastructure leaning towards cold storage to ensure that our supplies, we're able to meet supply all year round, instead of having this cyclical, price increase and price decreases. That's one. Two, we're also talking about infrastructure around climate change, and because we are seeing that happen, steadily. At least since 2020, we have seen huge flooding incidents in key food-producing states that eventually has a negative multiplier effect across the nation. And so the government heavily, providing infrastructure or supporting infrastructure development to ensure that flooding incidents are mitigated. We're investing in R&D to ensure that, there's food supply from those states all year round, is extremely important. At least before, we can significantly say we want to start cutting down on food importation, we need to ensure that food self-sufficiency is pretty much on the mark, and that significantly means that strong infrastructure in ensuring that climate impact is, resolved for food storage across all year round, which involves cold storage facilities, is significantly, improved. And I will also say logistics. Yes, there's investment, and a lot of infrastructure towards ensuring that there's real facilities, but the connection from food to market is extremely important right now. Good roads from producing states to consuming states extremely important. There's a lot of bad road networks from when you look at coming from a state like Niger State all the way to Lagos, bringing in tomatoes or groundnuts. You would, by the time you speak to market participants, you would know that there's a lot of bad road infrastructure that significantly impacts the cost of these commodities and contributes to spoilage and wastage. So it's extremely important that we address that. And the final thing would be supporting SMEs that are significantly significantly, boosting food processing and adding value to food systems. So that's something that I will say right now we're seeing a lot more happen in Lagos State. And if that happens across food hubs, within Nigeria, I think that will be something that will significantly important to support the drive for food self-sufficiency. And what that looks like in practice is businesses that are already, building cold storage facilities, businesses that are already adding value to key comparative advantage crops that we have in Nigeria, say, for instance, palm oil, cashew nuts, sesame seeds, shea, ginger. Those are strong commodities, tomatoes, groundnuts, yams as well. These commodities, ensuring that we're able to support SMEs that are adding value to these commodities and ensuring that they supply all year round. I think that would go a long way in ensuring that, we do support food systems and ensure there's, enough agric productivity here in Nigeria.
Beautiful stuff. Now, finally, the Federal Reserve cut interest rate by a quarter point yesterday. The big one. That's the big one. Big one after much wait. I don't know how you react to this. And do you think we would have any shift in the next MPC meeting here in Nigeria, considering the fact that our inflation rate is now 20.18%?
Yeah, I think so there are two things, right? There is the fact that I think almost, all economists, I would say globally, anticipated the rate cut. It had been talked about from the beginning of September, up until the meeting was had. And so it didn't really cause any frantic change. The difference now is that what it means for the US dollar, right? With lower interest rates, there's a chance that the US dollar loses some steam. Yeah. And if that happens, that in fact would support, the FX markets across, emerging and frontier markets. And this is because, commodity exports are likely cheaper. Sorry, commodity imports are likely cheaper. And, that would support their FX positions, right? But more importantly is what it also does for other commodities like gold, right? Safe haven assets. Would see that flock of, investor demand towards safe haven assets. And a significant trend that we have been seeing across emerging markets, especially in Africa right now, is the ramp up in gold reserves. Egypt is doing it, Ghana is doing it, South Africa is doing it, Nigeria is on the radar as well for doing that. And the thing is, once we see gold reserves prop up, it means that there's more buffer, right, for FX reserves and FX support for these African markets. And if that happens, we would see, the Naira and a lot of African currencies, I will say, remain resilient despite global headwinds. Now for interest rate decisions, we've seen different markets across Africa, and even we've seen different markets, and also we're also seeing different sentiments even here in Nigeria in how the MPC is going to respond. We're seeing some countries take dovish stances. Look at Ghana, for instance, another jumbo rate cut. Nigeria, on the other hand, because the Naira has been stable, we're seeing T-bill rates also decline. T-bill rates for 1 year now is around 19%, far below, what the MPR is. We're also seeing like there's some, interbank liquidity on there that the central bank might want to, kind of address. GDP rate is also looking good. Debt situation is kind of looking upright in the sense that the DMO, Ministry of Finance, are looking to ensure that Nigeria definitely addresses its debt situation. I will say that there are prospects right now. It's pretty split that the CBN or the MPC is going to cut rates. But I would say that it's kind of 50-50 right now for a hold decision, and 50 in favor of a hold decision, 50% in favor of a rate cut. But the rate cut will be quite minimal, between 25 to 100 basis points.
I'll definitely reach out to you when that happens, and we'll talk about it again. Thank you so much, Dumebi Oluwole, senior economist with STERS. Do enjoy the rest of your day. Thank you for your time.
Thank you for having me.
All right, then.